All right, thank you all for attending today's School Employer Advisory Committee. My name is Scott Yates. I'm a manager in the Office of Stakeholder Relations at CalPERS. First of all, I want to remind you about some housekeeping issues. We really do appreciate it if you take a second. If you have a question, raise your hand and use the microphone. We have people calling in and participating remotely, and they won't be able to hear unless we use the microphones. We have 2 microphone passers in the back. So again, just take a moment, raise your hand, and we'll get those mics to you right away. Second, we have a new email address. This is primarily for the folks participating remotely, but also worth mentioning to you guys in the room here. It is CalPERS_SEAC@calpers.ca.gov. You may remember previously it was school_employer_advisory_committee_. So we tried to simplify it for your purposes and ours. And then finally, I want to get right into the agenda. We have a full lineup today, 6 different presentations. We're going to start this morning with the CalSTRS right of election update from Heather Herf. We'll go into the CalPERS marketing toolkit from Lisa Coons. Then we'll hear about interest on delinquent contributions and the circular letter from Brad Hansen. We'll take a short break, as we normally do. Then we'll go into legislation update from Danny Brown. Annette Boucher will talk about efficiently running Cognos reports. Nancy will talk about working after retirement. And then Linda or Corey will speak about 2013 retirement planning fairs and educational forum. And then finally, at the end, we'll talk about topics you may like to hear about at our next meeting. Are there any questions before we get into the program? All right, Heather Herf, you are up.
Good morning. So, yes, I am here to update you on the CalSTRS right of election. As you guys may know, we tried to incorporate a change to the government code through legislation amending. It was in Senate Bill 215 that we included trying to add the break of 120 days for people with less than 5 years when it came to this election. And I have bad news. Unfortunately, Department of Finance was in opposition of this amendment. And before we could even rebuttal, it was successfully removed. So the concerns they had were that the cost to the employer would increase. And so we were going to try to explain some of the ways that that was not, and we never had the chance. So at this point, we will continue to uphold the current practice. So if someone has a break in service and they have less than 5 years of service, we're not going to allow the election. If they have 5 years, then the election will be allowed if they have a break in service. And the only thing we can suggest at this time is that you as the employer maybe take it upon yourself to propose some legislation changes to this. That way, coming from the employer, their concerns may be answered, that you're not concerned about the increase in liability. So, does anyone have any questions? That's okay.
On the right of election, I just wanted to know if there was an error in right of election. Let's say we put somebody accidentally in the wrong system, and then we find out after, let's say, 2 years, and we make that correction. Are we going to be penalized in any way? Because it's past 90 days before we brought them into PERS membership.
I'm not going to be able to answer that. Is somebody from employer able to answer that? Will they be penalized if they've made a mistake and given them this election, enrolled them in PERS, and 2 years later they find out that they shouldn't have given the election, the payroll adjustments have to be made, everything needs to, will they be penalized for that?
They enrolled them in CalSTRS.
Right.
Either or, and then it comes out that it was incorrect.
Yeah.
Can we get Emily a microphone, please?
Yeah.
I don't like to answer these just right off the bat because we like to look at the documentation that's provided to us to determine if they're in violation of the 90-day 20283 government code section. So we just need the documentation behind the situation. We'll look at it and then we'll make that determination then.
It would be nice to have something a little bit more clear in a way to educate the districts why it is important to look more deeply into it before they give them the election.
I've said in the past, if any, one of the things you can do is the calls will get forwarded to my area. If there's concern over whether or not someone should be given the election, they can call beforehand. We can look at the account, we can help. So that way you can avoid that completely.
Okay, so it's the same thing, look at case by case basis.
Yes. I mean, it's just really hard to say arbitrarily that, yes, everybody's going to be waived the 20283 penalties because of something that should have happened, didn't happen. We really need to look at the documentation behind the situation in order for us to make that determination.
So when we do send some kind of a right of election form to PERS, for example, do you closely look at it if the person had the right of election, or you just take it for granted?
Yes.
So I deal with membership. Heather's area deals with the election piece.
Right.
So should there be any concerns, that should be documented with the right of election, and then she can tag team with me and we can look at it and make that determination.
So right now there is a practice that you look at it.
Yes.
Okay, we just want to make
Every
sure
election,
that
yes.
we can
Every-
count on you that if something is wrong, we will hear from you.
If we receive an election, then we do look into it.
Okay,
Sometimes I know members can be enrolled, not given the election, and we have no way of knowing that they should have been given the
Yeah,
election.
right.
But the ones we do receive are looked at, every single one of them individually,
okay.
in depth. So
Thank you.
If you've made an error, you should be notified fairly quickly. Okay. Any other questions?
Can you please define break in service?
Break in service is just that, even one day. So any time that you have a separation and a start, if they have less than 5 years, they're not allowed the election.
So that still includes weekends and
That's
holidays?
true, yes. On the CalPERS side, yes.
Okay.
Back to the break-in service, if they're being hired within the same district, because you wouldn't have to do a separation, they can do the right of election. But if they're hired for another district, even if they started the same day, like worked half a day and another half a day at the other district, because there's a separation, that constitutes a break-in service, correct?
We are not going to know that there's a break in service if it's within the same
Same district.
district.
So if they're hired for the position with that district, they're safe. If they're hired for that same position with the different district, it's considered a break.
And they need to
And
take that
it's
into consideration
not
when they
allowed.
make that move, yes.
All right.
So if they overlap at all, there wouldn't be a break in service before the election is made. Is that true?
That's true.
If they overlapped for a week, it would be fine.
Yeah.
Okay, thanks.
Any other questions for Heather? All right, thank you, Heather.
Thank you.
And one more thing, if I could ask you all, before you ask a question, to just take a moment to introduce yourself and your agency. That'll help our staff circle back to you after the meeting if we need to do that. Next up, we have Lisa Coombs from the CalPERS Office of Public Affairs talking about the MyCalPERS Marketing Toolkit. Take it away, Lisa.
Good morning, everyone. How are you doing today? Great. So again, as Scott mentioned, my name is Lisa Coons. I'm from the Office of Public Affairs. I'm the Web Communications Strategy Manager, and I'm here today to talk about the member self-service version of my CalPERS and what it can do for you and your staff and getting the word out about it. So exactly what is my CalPERS? It's a self-service site for our members. It's a secure site as well. That's very important. And it offers timely information and details about pension and health benefits. And also the registering for my CalPERS is simple and easy. It takes just a few minutes. Once you have an account on my CalPERS, you can schedule one-on-one appointments with a CalPERS representative at our regional office. You can apply for retirement online. That's one of our newest features that launched. You can set your mailing preferences. You can choose whether you prefer to be communicated by email or phone, and you can opt out of some of our publications that are mailed as well, such as Perspective and the annual member statement. When you can choose whether to receive it by mail or receive a statement online through my CalPERS. On our homepage, you can quickly see your benefits available to you, and again, the statements and publications which you can download or order right there from the site. And if you want to learn more about these features, this email address here, or excuse me, URL for my CalPERS Central shares all that information of what you can do and what my CalPERS offers. So when the first version of the member, my CalPERS, launched, that was in 2007, we did have a toolkit that we produced to help promote the new site, and we provided that toolkit to our employers. One thing that we want to clarify is we understand now that there's also my CalPERS for you to do your administrative work with us online. We're slightly changing the name. It's just a marketing kit now because there is a technical toolkit that you have available as well. But again, this marketing kit originally back in 2007 had posters, fact sheets, frequently asked questions. And with the new launch last year, the revamped My CalPERS member self-service site, that was just about a year ago, July 2012, we knew that it was time we needed to update this marketing kit. So first what we did is we sent a survey to employers. And we just wanted to know what worked before and what would help you now, would help employers now. And we found that posters, you were not interested in posters. So, but you did ask for print collateral. What we've done is we have, right now we have a new publication available, and it's a guide to web resources. We have a tip sheet, tip for registering on my CalPERS, and that's available online. But we have a pilot group right now. We have 13 employers who are piloting this new kit, and it'll end at the end of this month. What we want to do is provide those findings at the employer forum. So they have that information, but again, at that calpers.ca.gov/myCalPERS Central, that information is available to you right now. We have the tip sheet and we have the guide to web resources there. With this toolkit, with those that are piloting it right now, they also have a couple other items that we've provided, an email sample that they can use to send out to their employees. We have some online ads that they can add to the intranet. And also, we did provide a link to the What My CalPERS Can Do For Me webpage. But what we're also doing, and I ask for you as well, and my contact information is here in this presentation, we're still looking for success stories. We're developing some videos, and even for our print material, we would love to hear about any success stories that you personally have had or any of staff that you know of as far as using my CalPERS. And so that I urge you to contact me if you know, have a tip for me, and we would love to follow up with them to hear about their success story and that we could perhaps share in one of our future videos or marketing materials. And as I mentioned, these findings will be reported at the employer forum, and then we will launch make available the toolkit to all employers at the employer forum. Marketing kit, not toolkit. And that's it. I'm open for any questions that you have. And again, my contact information is there, my phone number and email address.
Feel silly having to answer on, or use a microphone just for a quick question. I'm Melissa Anderson from San Bernardino County Superintendent of Schools. Just wondering, actually, how were those 13 employers chosen, and is it a representation of both districts and county offices, or how did you determine who was going to pilot the program?
Thanks for asking. In that initial survey that we sent out, that was in May, we sent out a survey. We asked if anyone was interested in piloting. And so we did receive some feedback on that, some responses. And then we reached out to some employers as well, ones that are former known as PERT.
Public Employer Readiness Team.
Yes. So our staff there, having relationships with some of the employers, did contact them. We have some county schools, districts. I wrote down a few if I can look at my notes here. I know for one, the city of West Sacramento, Napa County, Solano County, but Los Angeles County Office of Education, Orange County Schools, San Joaquin County Schools, those are that's a few of the participants. Yes. If you're interested right now to see the other marketing kit materials and want to start using it, you can contact me. Any other questions?
Vina, if you break it, you buy it.
I always sit on the wrong seat, even though I take 2 spaces. This is not to do with this, in case you happen to know that this year, the member statements, are they going to be mailed or they are just available online only?
If I'm getting the correct document, annual member statements will now be available. They always have been available through my CalPERS. And you have the option of logging in and then selecting that preference. I think the preference is switching to not to be mailed and that you would see it electronically. But you have that option to go in into your account, set that preferences, and indicate you would rather have it mailed to you through postal service.
So the members were informed that the default is online only unless they selected. How would they think of that I need to?
I believe so. I think I might need to get back to you on that. I believe there's an article coming out in the next Perspective, which is due to be sent within the month.
Okay. Thank you.
Mm-hmm.
Lisa, before we let you go, this is a very active and engaged group here, and I think they may be a great resource for us for those commercials. What would some of those testimonials look like? Is it a member saying, hey, you know, I was able to apply for retirement, it only took 5 minutes, or maybe some examples of what those might look like?
It could be that. It could be even from your perspective, from an employer perspective, this is, this is a great resource for our employees. It's saving them time and it's saving us time. It empowers them. It allows them to see their information and look it up themselves to get those details. Or like just what you mentioned, Scott, applying for retirement was easy, and it didn't take, it was an easy process, easy form to use. Along those lines, basically.
That's perfect.
Yeah.
So you have Lisa's email address there. If you have ideas that you may like to participate or one of your staff, please send it to her. You can also send it to our SCAC mailbox.
Francis Mraz Laco. We're one of the pilot agencies that you asked to participate. And for any other county offices or district, it's probably a good thing. We passed it out to our employees. They were excited about it. And the minute they left our little meeting, they were on their PCs trying to log in. And so I'm waiting to collect feedback from them to present to you. It's really not that difficult. There were 3 pieces of documents that we handed out to the staff. It's not complicated, so if you want to participate, it's probably something very good.
Wonderful. I'm glad to hear that. Thank you so much.
Any other questions for Lisa? Thank you, Lisa.
All right, thank you.
Okay. Yay, Lisa. Next up, we have Brad Hansen from our Customer Account Services Division, and he's going to talk about interest on delinquent contributions. It's all you, Brad.
Thank you. How's everyone doing this morning? Great. I think I've talked to a lot of you before at other SEAC meetings as well as the Ed Forum. I'm Brad Hansen from the CalPERS payroll area, and today I'm here to present information on interest on delinquent retirement contributions. And I'm not talking about admin fees for late payroll reporting. I'm not talking about admin fees for clearing your suspended files. I'm actually here to talk about your contributions and if they're not paid in a timely manner, interest being charged upon them. So why charge interest? Well, it ensures the timely payment of our retirement contributions. Unfunded liability could be a huge thing for CalPERS if we don't have all of our contributions in a timely manner. When we have our contributions in, we can invest them appropriately and get a better return on investment, which benefits all of CalPERS. Additionally, it is part of our government code. It's part of the law. It's actually been in the PERL, the Public Employees Retirement Law Book, since 2009. We just never had really the technology to implement it efficiently and to track it properly. Our old world system didn't work well with our accounting software. Well, the new MyCalPERS system actually works really well with it. And additionally, employers can look real time and see how much contributions actually have been paid to each rate plan and stay on top of it much more efficiently than they have in the past. So it was just perfect timing. We got the programming involved. We wrote up our procedures, and we thought now was the best time to actually implement it. So there's going to be 2 different frequencies. We did do an initial run of this in the beginning of July, approximately July 8th. And what that initial process did, it went back and looked at all of this previous fiscal year. We also are going to run a monthly batch report on this. I'm going to cover that very shortly. And then we're also going to do a year-end report as well. So every month we're going to run this batch job to ensure employers are paying their unfunded liabilities. As I'm sure all of you know, contributions are due to CalPERS 15 days from the end of your pay period. So let's say the end of your pay period was April 15th. Your contributions would be due by May 1st, 15 days after. So the monthly process. So we're going to run on the same day every month, the 30-day process. We actually haven't hammered out the official date on when we're going to run that. Our fiscal services department is deciding that now. But they're going to run that at the same time every month. It'll usually be the first week of the month. What the system's going to do is it's going to look at each rate plan that is offered by your district, and it's going to assess if you're at the 90% funding level. If you're at 90% funding, nothing will happen. If you're below 90%, you will be sent an invoice for the entire amount of what is due, up to 100%. So you have 30 days to pay up to 100% of what's due for each rate plan. If you don't pay within those 30 days, 10% interest will be assessed to your account. And that will compound every month that the contributions are not made whole. So it's not back up to 90%, it's actually for the full amount. We prefer employers always pay up to 100%. 100% is what is due. Additionally, and we've actually gotten quite a few calls about this, and it's more of just a heads up, a kind of a warning letter. If you're between 90 and 99% funded, a letter would be sent to the employer stating, right now you're not at 100% funding. If you're not at 100% funding by the end of the fiscal year, you can be assessed interest. It's just a nice to know, a warning, letting you know that, hey, right now you're not fully funded. You don't need to make a call on that. You're not going to be assessed interest until the end of the year. It's just something that we're just giving you a warning for. So the year-end process, and we're actually very close to running this on August 17th, we're going to run the fiscal year-end annual process. And this one's a little more strict. It's actually going to look at 99% of the fund. So for each rate plan you offer, say like your PEPRA, your pension reform rate plan, and then your classic rate plan, your safety plan. It's going to look at that and say see if you're at 99% or above. If you're below 99%, it will work very much like the monthly process. You'll be sent an invoice to pay for 100% of all the contributions. If you don't pay that within 30 days, 10% interest will be assessed, and it will continue to be assessed every month until it's been paid. The notifications, the letters that will be sent, the warning letters, the invoices will all go to your preferred communication method. So if it's an email, it will go to your email. If you don't have a preferred communication method selected, it will be simply mailed to you. You can always check where you're at with each rate plan by looking at the employer billing and payment summary section of My CalPERS. It breaks out each rate plan and it shows the percentage that you're at. There is more information online. I pretty much covered the basics of it. There's a little more detailed information online. If you check out our circular letter, it was also mailed around the same time we ran the initial process, which was the first week of July. I think it was July 8th. And it details all the information I talked about today. Also, the PA and school manual have been updated as well, and that's available online. And that also shows you how the interest process works. I also wanted to add that CalPERS Online, not My CalPERS, but our website, CalPERS Online, if you search for making check payments online, it will also give you more instructions about paying those invoices. I don't have the exact link. You have to kind of dig down to find it, but if you simply click and search making check payments online, you should be able to find it. All right, so I talked to my fiscal services division, and they wanted me to give you guys a few tips about this. Make sure that if you're making check payments, to submit it with the remittance advice. The remittance advice will tell fiscal, our fiscal services department, where to apply your contributions to. We actually got quite a few calls at the end of the fiscal year. Some money was applied to the wrong fiscal year or the wrong rate plan. In those cases, we can work with you to fix those issues. Those are the only cases in which we won't assess interest if you show below the 90%, if it was truly just money was sent to the wrong rate plan, or let's say it was just a My CalPERS issue where it got submitted to the wrong rate plan. Those are the only times that we will forgive interest. There are no waivers for interest. I'll let you ask questions at the end. Thank you. If you are paying online, make sure that you're paying to the right fiscal year and to the right rate plan. We've had some calls about that too, mainly about the fiscal year. Once the fiscal year changes, the rates change, and it will default to 13-14. If you meant to make the payment to 12-13, it will be applied to the wrong year. Had quite a few issues like that as well. Make sure to review the procedures online. If you are making payments through the mail, it's very detailed and it explains how it works. If you're unable to actually print your remittance advice, talk to your IT department. You guys should have an administrator there that should be able to resolve that issue for you. And of course, if they still run into any issues, they can always give us a call the contact center, and they can get you to the right section and they can work through your IT issues with you. Okay, so that is the end of my presentation, and now I'll open it up for questions. Yes.
If I submit my contributions for too much into one of my rate plans, am I able to go on and move money from one group to a different group? Like if I did too much to the Classic and should have done it to the PEPRA?
You can't actually do it yourself. You'd have to contact us.
contact you
And
to
our
have it
fiscal
done.
services department can move that money for you. And that comes up quite a bit, actually.
Okay.
Yep.
When do you determine how much contributions are due? At the point that a file is uploaded and posted, or just at the point that the file is uploaded?
So once the file's uploaded, it creates account receivable. And then what we're going to do is every month, we're going to run that batch process to check if you're at 90%. So if you have your data in the system and we see that the contributions haven't been paid within those 15 days, and then they run that batch process and you're below 90, that's when you'll get that invoice.
And if the file is in suspense because of some uncleared errors, is it the value of records that have posted on that file?
Yes, just the post that's suspended will not create the account receivable necessary for us to assess the interest. I will add, though, if you have suspended files and those aren't cleared within 60 days, you will be assessed a $200 admin fee. Those $200 admin fees are not subject to interest. However, we do turn those over to our collections area, and they will call you until they're paid.
Yes.
Yeah.
Gotten the call. I forgot to say who I was, Francis Miraz at LACO. I received 3 separate invoices totaling approximately $1 million
Okay.
for arrears contributions, but this is because CalPERS can't apply the money to the right agency contracts. And we have no way of defining those agencies because they're not set up in my CalPERS. They're set up as part of a district because they're security, or they're a separate agency. And so
I will add that the arrears receivables are not subject to interest. They're a completely different receivable.
but I got a call from collection that said they were going to bill me $75,000 in interest.
They told me that the arrears were not subject to interest. I'll have to bring that back
to
to.
talk to make sure that our monies are getting applied, because we are remitting the full amount, 100%, but it's being misapplied.
I could talk to someone in our fiscal department and they can give you a call. Okay, and that's Francis Miraz, right? Well, I'm gonna take her name down real quick.
This is Anna Lambert from Riverside County. I have a question about if the remittance was applied to the incorrect plan, PEPRA versus Classic.
Yes.
Who do we talk to about that?
You can just give us a call, contact the contact center. They will send an email, what we call workflow, over to our fiscal services department, and they'll have somebody contact you and work with you through that. If you have a payroll analyst that you work with too, you can call them directly and we can forward the workflow to them as well.
Oh, the payroll.
Yeah.
Okay.
Yeah.
Thank you.
Hi, this is Veena from Orange County.
Oh, hi.
Hi. First thing is, when you are saying that billing and if there is no mail, by mail, if no preference identified, so when we get the invoice in mail, that means we'll have more time.
When you
If
get
we
it,
take out the preferred
if it's
communication.
mailed, when you get the invoice, it will tell you what the due date is.
I'm
It won't
just
give you
kidding,
any
I just-
additional time.
I'm just kidding on that.
Oh, okay, sorry.
My actual question is, you know how when we submit a file, and then sometime we have to delete some entries and we make an adjustment file?
Correct.
I haven't really looked at your remittance advice, so I'm not that familiar with it. Do we associate the file with the deposit? So when you calculate interest, you know this deposit applies to this file.
When you
and
submit
it
the,
can be combined, two files.
we won't look at the data on the remittance advice, so they do want you to indicate what rate plan you're paying it towards.
But not the
Not the
which
actual
pay
payroll
period
file.
file or earned period file.
Right.
And why is that?
I'd have to ask our fiscal department why they programmed it that way, but they just are looking at the rate plan. Our data creates just a year-long receivable, and that's what it looks at.
Yeah, because this rolling balance system
Yes.
doesn't work good for us.
Okay.
Because we need to associate it before you calculate interest so we can be more informed how we should submit the money and file. So.
Okay.
Okay.
All right, I can ask them that.
Okay.
But yeah, as far as I know, it's just by the rate plan. So when you print that remittance advice, it will say what rate plan to associate to, and you make the check out, and it will go to that remittance advice for that
Yeah,
payment.
because we went through all this, like Francis was mentioning, and other people transferring from one plan to another. And then we had a adjustment file posted in another month because we didn't understand how your rolling balances is expecting money
Right.
based on the date of the file submitted
Yep.
for adjustment files.
We had quite a few issues with that at the end of the fiscal year. That seems to be one of our more common issues because it changes over. Someone didn't change the fiscal year. They didn't submit they submitted the old remittance advice or the new remittance advice. So I can talk to them about that.
Maybe the interest calculation might be more accurate if this is in place first, associating the deposit with the files.
Okay.
Okay, thank you.
Oh, yes.
Hi, Victoria, Marin County. Just wondering, for those of us who have independent reporting districts, will the invoices be sent to them that relate to their reports, or will we receive them at the county
Who
office?
actually makes the payments?
They do.
They do, so it would be sent to them. It
Okay.
should be sent to them, as long as they are the contact on my CalPERS.
Okay.
If
Should
they're
be.
not, then it will be sent to the default, which would probably be you.
Well, I mean, they're set up as independent reporters, so they should.
They should have a general contact, and it will default to the general or the payroll processor or whoever you indicated as your financial person.
You mean who they indicated?
They
as.
indicated, I apologize, yes, whoever they indicated.
All right, thanks.
Yep.
Hi, good morning. My
Morning.
name's Debbie Stiftinger. I'm with the Fresno County Office of Education. My question is kind of twofold. With these invoices going to be generated and so forth, there's probably going to be a lot more questions coming up as to why this was received. You had mentioned that we can go into the billing and payment summary section and see at what percentage we currently are at.
Right.
Well, I frequent that regularly, and the problem I have is when I do detect a problem, I call in, and it's over 10 business days before I get an answer. So are they going to be adding more people to help with this situation? Because before I get an answer, I've already sent more money in for an advance or my final payment, and it further compounds the issue. So when you go to explain it, you have a stack of paper, and then you have to start all over again, and then somebody has to research it and call you back, so their problem just keeps compounding. And then also, the 13-14 year, I haven't posted anything yet to it, but I'm showing a balance in there. And I called on that, and I didn't get an answer, so I called back.
Okay.
And somebody had said in the notes that it was a technical issue, and nobody called on it. It was just taken care of, but I didn't see anything on it. But to date, I still have that balance. I have a credit balance showing in 13-14, and I have done nothing in 13-14.
Afterwards, if you want to, could you give me your phone number, and then I'll have someone from our fiscal department look
Absolutely, I
into
would
that and give
greatly
you a call back.
appreciate that.
Okay, yeah, I mean, we have identified some customer service improvements, and one of them is our workflows. We are trying to at least acknowledge our workflows. Those are the emails that come in from the call center, the inquiries, that we want to try to acknowledge those within 5 days. So we have identified there has been a lot of issues with workflows not being answered in a timely manner, but we are addressing that issue.
I mean, I appreciate the fact, I know you guys are very busy,
Yes.
and there's a lot of us, but with adding more penalties and, different applications now, there's going to be a lot more questions.
Oh, of course.
And when it comes to money, that's like a hot spot for everybody, so I'm sure everybody wants to be on top
Yeah.
of it, us as well as you.
I agree. And we do communicate with our contact center. We give them a lot of information on try to handle the more high-level issues, but then they have to workflow those over to the right department so that they can address the technical issues. Okay.
Thank you.
Thank you. Any more questions? All right, well, thank you.
Thanks, everybody. In just a moment before we go to break here, I do want to acknowledge a question that came through online from Pam Granari of Yosemite Community College District. She kind of echoes Vina's question regarding the member account statements. Her concern is that not all staff have online access, and we're kind of putting them in a corner where they can't then default to receive them via paper. So I'll make sure this gets escalated. I think Lisa's still here, and it'll go, there she is. So the Public Affairs Office, Pam, will be informed of your question and concern, and it didn't go for naught. It was received. Thank you very much. With that, let's take our, let's do a 15-minute break and be here back a little after 10:25. Thanks.
All right, good morning, everybody. I'm Danny Brown from the Governmental Affairs Office at CalPERS. Hopefully you guys have a lot of questions so I can use my entire 15 minutes. Obviously not a lot has happened probably since the last time I was here. As far as our bills, and then the legislature is just now getting back from their summer recess, so they haven't stirred up any more trouble. So it'll be a horse race here. We have 6 weeks left, so a lot could happen in these last few weeks. One thing that I'll just bring to your attention, we are going to be making an amendment in our housekeeping bill, SB 215. I'm not sure how many of you have health care with CalPERS, but with the ACA, federal health care reform, it does require large employers to provide health insurance to their employees that meet the definition of full-time employees. And in the federal law, full-time employee is 30 hours or more. And so there are some provisions in PIMCA that exclude part-time employees or those folks that are not members of the retirement system. So we need to make a change in PIMCA for those employers that will need to bring in some of their less than full-time employees. It may not be an issue with school districts. I think you guys are already around 30 hours or 35 hours for most of your employees, but there are employers out there who have employees that are working, less than 40 hours and are not part of the healthcare system because they're not members of CalPERS. So we're going to be making that change. So for those employers that need to bring in those part-time employees. So I just want to make you aware of that. If you have any questions, let me know. Are there any questions on that? It's kind of a real technical thing, and I guess unless you're dealing with it, you're probably not too aware of it. Yes? Oh.
See, I'm being good. Melissa, again, from San Bernardino County Superintendent of Schools. Just wondering, I know that there's been some chatter about, the cleanup bill and people intimating that perhaps there are more than just slight technical changes, that maybe there are some provisions within the cleanup bill that we should be, more aware of. Can you be specific about some of the provisions of the cleanup bill or SB 215?
SB 215?
Besides the medical portion, about the retirement portion.
Sure. I'll have to remember off the top of my head. So there are a couple of the changes that are in here. Well, one of them we've talked about here, and they probably talked about it earlier today about it did have at one point the PERS right of election, and we had to pull that out as a result of the administration not willing to sign the bill with that in there right now. The other provisions that are still in there is there's one dealing with the process for reimbursing employers who have board members that sit on our board. So if there's the 6 elected board members and they will get their salary, we reimburse the employers for the time that they spend on board duty. So we're making a change on that to make it more clear on how that reimbursement process happens. So I think Napa School District's probably the only one that has a board member. So if you're an employer, if you have Rob Fechner in your school district, then you may want to pay attention to that one. If not, it probably won't pertain to you. There is a provision that we're putting in dealing with contracting for health benefits. So Again, I'm not sure how much it will pertain to you, because I know on the pension side, your contracts are technically through the County Office of Education. With healthcare, what we're trying to do is align the contracting process with how we contract for retirement, because those units with our reorganization combined, and so now they're all under the same roof per se. They used to be really separated. So we are going to put some language in our bill that would allow the board to, instead of just adopting a resolution, you would actually be signing a contract, and so it kind of all spells out the rules so that everybody's clear on how that process it works. I mean, it will be, it should be transparent to you as far as workload. It's just more of being clear that there is a contract, and so when you sign up for healthcare with us, there's things that you need to do, there's things that we need to do, and we just want to make sure it's clear, because most people just pass the resolution and they never read the law and they don't really know what they've agreed to. So we just want to make it clear on what those rules are to the employer. There is let's see. I'm trying to. You've probably stumped me because it's been so long that since I've talked about. I just talked about this bill or read it, but I mean, those are really the two biggest things in the bill, because we had to pull out 2 items, and so I think there's only a couple left, and so the other things probably are truly technical changes. So those are the 2 big items. Nope. And all of these things are, brought to our board and spelled out in the agenda items. So there was an agenda item we took to our board in December, which spelled out the things that we wanted to do in our housekeeping bill. And so it is out there, and so we do publicly talk about it. No, but it's like I probably talked about it the first time we were here, and then after a while, I just assume you guys all are here at every meeting, or you guys remember what's in there. Yes.
I do have a question on pension reform. Anna Lambert from Riverside County, most of our districts have EPMC, and they had MOU impaired, so they submitted those forms to CalPERS. And I received a call about a few weeks ago saying that some of the districts say they will pay 100% of the contributions. Some of them say they will pay 7% of the contribution. And I know at one point in time, we said for new members, they would only accept, CalPERS would only accept the 6%. What I got from the phone call from the CalPERS employee that I talked to is that they were going to be making changes to the system that would allow the districts to pay the 7% and not the 6% for new members. Is that correct?
I don't know the answer to that question. It's not really a legislation question. It's more of an implementation at this point of how they're implementing it. Because it was my understanding the law only requires those new employees to pay half of the normal cost. And so, and my understanding, half of the normal cost is about 6%. So we'd have to ask the program folks as to what they're doing as far as implementation and why they're making that determination. Because I think that I would just, I don't want to speculate, so we'd have to get information from the program areas as to how they're implementing that going forward.
So making the decision between submitting 6% or 7% is not really related to the law, but
no, because the statute just says that new members shall pay half the normal cost. Now, you can agree through collective bargaining to have the employees pay more than half the normal cost, but I mean, you can't. It would have to be an MOU or some kind of an agreement where if your members have agreed to pay more than 6 and pay 7, then yes, you could do that. But the law only requires them to pay half the normal cost.
If the agreement is that the employer will pay 7%, but because it's a new member, CalPERS would only accept the 6%. That's where I'm a little.
So you're saying the employer's paying 7 on behalf of the member?
Yes, because their bargaining agreement says they will pay 7% for the entire class of employees. Now you have to differentiate between classic members and new members, where the law only allows 6% for new members now. yet the agreement says 7?
I believe that they, again, I don't want to, is there anybody from the program area that knows the answer to that question? Yeah, I think that if the MOU has the employer paying more, I think they can manually fix the system so that they can accept the 7%. But schools may be a little bit different than a contracting agency because, again, you're one big pool, and I don't know how they can just change it for your school district without changing it for the entire pool. So it might be a little bit different because of the fact that you guys are one big pool and you're just one district within that pool. And so I don't know what workarounds or what things they can do to allow that to happen. So sorry, I don't know the answer to that.
I was just going to say, we went through that exercise with PERS about the EPMC, and the way I understood, like the new members can only pay 6%, even though the MOU says 7, since they will error out if we did 7. So it's normally an offset to employer rate or something, but even though MOU says 7, we still pay 6. And that's what we have been doing. Thank you.
Since we're talking about pension reform, I'll just, SB 13 is still out there. We're still waiting for a last set of amendments that the administration is trying to work out with the legislative consultants. Obviously, they're going to have to do that quickly. One of the things that we're obviously watching closely is the pensionable compensation. We still have not finalized or even kind of drafted what our ultimate regulations are going to be around pensionable comp, and I'm sure you guys are anxiously waiting to know what's going to happen. So we're kind of at this point in a holding pattern, waiting to see what happens with the legislation and where that goes and what the final product will be. And once that comes out, then we will start going back down that road to adopt regulations on how pensionable comp will be reported for these new members. Yes.
So I'm assuming we're going to go through the whole process through the Office of Administrative Law and all of that for the regulation process.
Correct.
When that happens. Do you have any sense of a timeline for that? For, when we'll be able to provide input on that?
I would imagine the earliest we'd probably bring something to our board is November. Assuming that the legislature finalizes something in the mid-September, and then by the time we actually do work, we'll do some pre-work and reaching out to the different stakeholder groups and before we do our board item, and then come to the board in November, and then that would start that 45-day comment period with OAL, and so who knows how long it will go until we actually get approved regulations. But I would imagine the first agenda item going to the board will probably be around November if everything works out okay.
Francis Moraz-Laco. Have a question on the 180-day sit-out period. If a district drafted a resolution, or the county office drafted a resolution on behalf of the district for an exemption to that 180-day sit-out period because they needed, for example, a superintendent to serve as interim, but that person retired. And let's say it was approved. And so the retired superintendent is interim within the 180-day period, and the district employs them for maybe 2 or 3 months. And the person leaves. And they find that they've not had a successful recruitment for a new superintendent, so they want to bring back the superintendent that's retired. But now they're beyond the 180 days. There's no resolution required, right? It's just the 180 days. The resolution doesn't move the 180 days or extend it?
Do we have a answer? Again, that's probably more in the program area, and I'd be afraid to answer, but I don't.
Yeah, is this on? If they're past the 180 days, then there's nothing required. Then they've met the requirements.
Okay, so there's no extension of that 180 days if they had this resolution?
It wouldn't be necessary if they're already past the 180 days.
Okay, thank you.
960 hours would still count. Since I have a little bit more time, I'll just, if anybody's interested, if you're not, you guys can just start nodding off. But at the federal level, there's a lot of things going on. I don't know if you are paying attention, but obviously with the Detroit bankruptcy filing, that has just gotten a lot of attention at the federal level, and it just kind of brought back a number of pension-related items that kind of show up and then go away and then show up. And so there's a lot of activity going on in D.C. because of that. The Judiciary Committee is actually thinking about having hearings on the Detroit bankruptcy. You may have seen that Senator Orrin Hatch has put out a bill around pension reform. It was something that he has kind of talked about over the last year, and it was big in his recent race for Senate. He had some competition, so he felt like he had to come out and be for pension reform, because Utah was one of the first states to implement some pension reform and went to a hybrid plan for its new employees. And so he thought if it was good enough for Utah, it would be good enough for everybody in the country. So he's introduced a bill that would require, or I wouldn't say wouldn't require, it'd actually be voluntary for local governments to, instead of having a defined benefit plan, they can offer annuities. They would purchase annuities for their employees. So they would actually purchase these one-year annuities. So if you had an employee, you'd purchase an annuity for that year, and then the next year you'd purchase another annuity, and then when that person retires, they would basically have 30 annuities that someone would then have to put together and send him one check. But the idea is to take the risk off the employers and have the insurance companies take on the risk. And then he has some things in there around how much money an employer can spend on these annuities. So maybe for a miscellaneous employee, the most they can spend is 25% of their salary, or 20% of their salary, and in safety it's a little bit higher. Anything over that would be taxable. So, and that's another big issue that is going on in Washington as we're kind of looking at pensions, and they're looking at tax reform, and they're looking at raising money. Is, you know, we are kind of in a unique situation in the sense that our contributions to our defined benefit plan are before taxes. And it is one of the largest tax spends for the U.S. government is the contributions to defined benefit plans and to pensions in general. So that, you know, that is something that they're always looking at, as to whether or not the contributions to these pension systems should be tax deferred. So I think one of the concerns about the Hatch bill, whether or not it goes forward as it is just the fact that they're putting these caps on how much an employer can spend in a retirement plan that are tax deferred. So you know, everybody's kind of keeping an eye on that. But again, just the whole kind of atmosphere, this what's going on in Detroit has just kind of brought this whole conversation to a different level at Washington. So something to keep an eye on. All right. Well, I think I hit my 15 minutes. So unless anybody else has any questions.
Great. Thank you, Danny.
All right.